Hello and welcome. You tuned into Your Trades with me, Ankita Saxena, and with me is Snehi Shah. And in this show, we will take you through all that happened in the markets. Snehi, not much of an action that happened in the markets. Another lackluster day of markets. In fact, we are pretty range bound right now. We closed within the previous session range on the Nifty and Nifty Bank both as well. If you look at Nifty, at one point we were down almost 0.6%, 155 points down, but we recovered from there. But nonetheless, we did not manage to breach the levels that we had crossed yesterday. In fact, we closed below the previous session's level. We recovered almost 133 points, but again, we turned into the red territory. Nifty closed absolutely flat. Nifty Bank also managed to recover. We recovered almost 215 points from the day's lows, but we again, slipped into the red. We were down 184 points on Nifty Bank as well. In fact, Nifty Bank also closed below the previous session's range. So very, very range bound, directionless trade coming in there. As far as the broader markets are concerned, both mid cap and small cap also posted recovery. In fact, good recovery came in the mid cap space because mid cap space closed, though in the red, just down 0.2%. We were down more than that, through the day. Small caps, however, managed to recover 0.5%, less than the mid caps. But there was carnage in, the broader markets. Small caps was down 1.5% in trade today. Bit of recovery coming in there, but nonetheless with cuts of 1.5%. If you look at a couple of names that were buzzing in trade, there was Bharti Airtel that was buzzing on the back of that big block deal coming in, where the promoter group has sold contingent investment has sold 51.1 million shares in the company. We also had ABB on the back of strong set of numbers coming in and brokerage notes. We also had Persistent System that was really pulling up the entire IT pack. Also, IT pack was really holding the fort also today. In trade, it was trading with gains of more than almost 1% in trade today on the back of Persistence, a bullish brokerage note that came in by JP Morgan. They're maintaining an overweight on the counter, and they see a potential upside of 30% on the counter. Persistent System was up 4.7% in trade and also pulling the entire IT pack with it. Nifty Energy, Nifty Realty also marginally in the green. All the other sectors were trading in the red. So that's how the day largely shaped up.
Absolutely, in fact, lots to talk about what today's trading action has been. And like Ankita mentioned, we were range bound. We've seen some decent recovery coming in on the Nifty today, a 140 point uptick coming in from the day's lowest point. So that's how we've shut shop for the day. It's not all that good, but yet again, it's not all that bad if you take a look at Nifty on the intraday basis because of that recovery that we saw coming. Just a quick rundown on the sectoral moves. Like Ankita mentioned, FMCG, however, on the flip side was a top sectoral loser. IT on the top, you had FMCG. So it's interesting to see how two defensives are on either end of the spectrum, because one side you have IT, which is the biggest gainer. On the flip side, you have FMCG, which is the biggest loser in today's trading session. Radico and Balrampur led all the losses across the FMCG pack. Nifty Auto has extended its losses for the 7th consecutive session. M&M continues to be under pressure after its EV bookings return meet street expectations yesterday. That stock was lower by 3 to 4% in yesterday's trade as well. Nifty Metal recovered more than 1.3% off the day's low. However, it has closed flat. So some good move seen across Nifty Metal, and Nifty Energy gains for the second consecutive session. NLC India and Thermax were your top gainers in that segment. But let's understand more of where we are headed when it comes to the markets, and for that, let's welcome on board Amar Singh, the Senior Vice President of Research at Angel One. Amar, hi, thanks so much for joining us on the show. Give us a sense of what we can expect to see in terms of level when it comes to the benchmarks, because every day we're seeing this lackluster move coming in, where in the first half we've slipped, or in the second half we've recovered, or it's the complete opposite, where in the first half we're holding up well, in the second half we've slipped. But nonetheless, we're not being able to cross this level on the Nifty that's proving to be a resistance on the top side. And to be precise, it's that 23,000 level is something that's seeming difficult right now for us to cross. Do you expect that in the coming days also, that now that we're inching closer to expiry on Thursday, do you believe that this is a week where we could cross those levels and perhaps inch closer to the 23,500 or so mark? Is that something that you're spotting on the charts soon for Nifty?
Yeah, I would say if we look at Nifty, definitely Nifty is trying to form a base. There's no doubt about it. And we did witness that if we go back slightly. So on 27 Jan, it had reached the 22,800 level. And from there, we had witnessed a significant recovery of almost 1,000 points. But then again, all the gains were given up, and Nifty breached that low also of 22,786. That was on 27 Jan. So that was yesterday. So having said that, what we see today is that there is a pullback. So it clearly shows that there's definitely buying interest which is coming in at lower levels. So 22,700, 800, that's acting as a very strong support zone. But at the same time, Nifty is also looking for fresh triggers because on one hand we have the FII selling relentlessly, and that's not showing any signs of stopping. But at the same time, there's not much of other negative news flows which are there. So markets have factored in most of that. And if you ask me about the level, I would say there's one level, you rightly said 23,000, it's a psychological level also. But 23,000, 23,050, that's going to be an immediate zone of resistance for Nifty. That's not very far from the current levels, 100 points, 70 to 100 points from here. Us breaching that level, then we could witness a 200, 300 point rally in Nifty towards 23,350, 23,400 level. So that could be where we could witness some sort of pressure. As far as looking at the chart from a short-term perspective, short-term, I would say charts are looking, I'll not say positive, but they are definitely indicating that markets are trying to form a bottom. However, the intermediate-term trend, which I've been talking about for quite many months now, that continues to remain a cause of concern. So that effectively means is that at higher levels, Nifty is definitely going to find resistance. But if it manages to sustain above the 23,300, 400 zone, then we could see a 400, 500 point rally in Nifty. But that's it. On the higher levels again, it would be selling into, because if I look at the long-term charts, the trend has changed, clearly indicating that it's going to be toppy trading sessions, and it would be more of a stock-specific play in the markets.
All right, speaking of stock-specific play, Amar, hi, this is Ankita also joining in. What are your picks going to be then? We saw a reversal coming in the IT pack also. It snapped its 7-session losing streak. That was buoyed by the sentiment for persistent system, of course, on the back of that bullish brokerage note coming in. But what are your picks? Are you seeing value in one of the counters from the IT pack? And what are going to be your plays for now?
Yeah, IT is definitely an area to be looked at. Because I see that that's going to benefit from two factors or two triggers. One is the depreciation of the rupee definitely helps the exporting companies, and IT is definitely a big player there. That's one. And secondly, there's likely to be some opportunities or increase in opportunities for the IT sector in the US. So I think that's going to definitely play an important role. So having said that, Tech Mahindra is one stock one can keep a close watch on. It has been consolidating. We've seen some sharp move also in the stock recently, and it has breached a crucial zone of resistance, which was earlier around 1680, 1700 level. So sustaining of the 1700 mark, the stock has the potential to rally towards the 1768, 1770 level. So that's one stock one can look at, and a stop loss of 1657. So this is one stock one can look at, because what we are seeing is that the long-term trend continues to remain positive, and short-term we are seeing a trend change for the better. So sustaining above 1680, 1700 is important. That's the one stock. And the second is from the banking space, and that again is Kotak Mahindra Bank. See, if you look at Kotak Mahindra Bank, this has really, despite the market correction, the stock hasn't corrected much. But at the same time, if you look at from an investor perspective, from a long term, really hasn't gained much either. But now it's definitely showing some signs of bullish momentum. It is inching towards some important levels. Earlier, 1930, 1940 was acting as a zone of resistance. So that has been taken out. If I look at on the long term, some of the technical indicators have turned positive after a very long time. So that bodes well for Kotak Mahindra Bank. So this is one stock one can look at the current levels, and with a stop loss of 1925 and a target of 2020 on the upside.
Kotak Mahindra Bank are looking attractive to Amar right now. Amar, thanks so much for joining us, sharing your market outlook as well as your stock specific picks. On that note, we'll let you go.